John. Last time I checked, neither you nor myself are epidemiologists. I'm not even sure I can spell epidemiologist. Who knows what this Russia news is, whether or not it's true or not. It'd be kind of a big lie if you just said we have a working vaccine, but you really don't. The day will come, I think, when we get one, whether that day is today or not. Who knows what happens when we do?
Well, Brian, I think the question is this the Sputnik moment? You know, it used to be the race to space, the race to the moon, and now it's the race to the vaccine. We've got to wonder. You've just got to say, well, how much has it been tested? And the FDA would have to test it if we were to adapt that. And in the meantime, you've got 160 companies around the world, all told, looking for this. I recall about 19 in the U.S. In the U.S. Warp Speed group looking for it. So I think we're, irregardless of whether this is on the mark or not, I think we're getting closer to a vaccine. And the question is, how quickly can it go through the testing? How soon can it be arrived at that people are going to be feel safe taking it? And I think when we get to that, that's the market is just looking ahead of all this. The market is at this point is considering a variety of things.
It is, and we've got a great analyst, Matthew Harrison of Morgan Stanley, coming up in a few minutes. I chatted with Matthew by phone yesterday, and the markets are optimistic about a vaccine. We also know that as bad as it is, that we have learned a lot about the vaccine, and thankfully, thank goodness, it is a lot more survivable, and the treatments have gotten a lot better since this whole thing just came out. I mean, we focus on case numbers, but luckily a lot of other numbers have gotten better. I guess there will be a day when we sort of return to normal, whether that's in a few months or a few years. What's the $7 or $8 trillion in stimulus going to do long term, John? Is it going to be a net positive or a net negative because it's not free money?
Well, I think once again, it's a mixed bag of what it is. But without it, the problem would have been an extended and deeper recession than we're experiencing. It's bad enough as it is, or even a depression, and we sure don't want that. We know the only way we got out of that, the world got out of a depression with a world war, and I don't think anybody wants that. So the expense of this is almost, you would say, an investment in our country. It's higher taxes. I don't think it'll be higher inflation. I think we'll get reflation out of this. I think the effects of technology and globalization, which will continue to be secular drivers of the world economy, they're highly counterinflationary. And I think the real problem in the world is managing abundance and making sure that it gets around to enough people to make a healthier, more prosperous world. Yeah. But with that said, it's just, you got to slog through all of this stuff. There's always trouble, and it just happens at this time there is heightened trouble. But we can get through it if we put our minds to it, shoulder to the wheel. That's what business is all about.
Yeah, we've been through a lot worse over the last couple hundred years in this country. I'm sure that we will. I like the optimism. Very quickly, John, any parts of the market that still seem under or fairly valued to you that would be good for your clients and our viewers to invest in right now?
Well, of course, depending upon the individual's objectives and tolerances, but we continue to like technology, consumer discretionary sectors. We also like industrials and financials, and we've been on these the whole year. We carried them over for last year. We think you want to be overweight cyclicals, modestly exposed to defensives, even underweight. The cyclicals are outperforming on a year-to-date basis, on a week-to-week basis now. Growth over value continues to be ruling, but we're seeing an expansion of the rally and moving into value in terms of small caps and mid caps are looking healthier right now. And then we want to be exposed internationally in some meaningful way to both the emerging markets as well as to the developed international markets, but rather cautious around China because with the administration looking at areas of technology and concern, that's a worrisome spot. You don't want to get stuck there. Already you've begun to see some weakness in international technology.